Okay, so by now you're probably wondering, which stock is about to drop $93 in the next 48 hours? That's exactly what we're going to talk about in this video. For those of you that are trading options, trading specifically weekly options, we're going to review the two probable opportunities that you can profit on later today or tomorrow. And for those of you that are like, Leonardo, man, you're posting these videos too late. You're posting these videos too damn soon. I can't make up my own mind about what the fuck I'm going to do today. And guys, quit the bullshit, okay? I'm posting this video at like 3 p.m. on September 23rd. This stock is about to announce earnings tomorrow before market opens. So you got plenty of time with the two possibilities of what the stock is going to do next. You got plenty of opportunities to put on this trade together. So no fucking excuses on this channel. Okay, let's roll. The stock we're talking about is AZ. Oh, and there's a whole lot of shit going on in this chart. Number one, you got divergences on the RSI, basically telling you the stock's about to tank. You got multi-top formation. Now, the coolest thing about this, 3 days in a row prior to the earnings report, and it looks like the stock is not moving, but it's tricky as hell because what really is going on is these three candles, they are bearish reversal candles. Guys, look, I don't have time to talk about in each every video what bearish reversal candles are. So if you're trying to make sense out of these stuff here, then you need to click the link below, take the damn charts, divergences, and pattern recognition course so you can evolve into a better trader. Okay, so $93 drop, you may think, dude, you're nuts. Okay, what's going on? $93 for this stock is just about 8% drop. 8% drop is not unusual considering the catalyst, which is the earnings report. Now, everything seems to be highly bullish unless you understand the divergences. Damn it, it's the divergences that actually allow you to see what's going to happen next. So actually on the accumulation distribution, it shows us that going into the earnings report, despite of the stock actually looking like it's moving its way higher, struggling, like grinding its way higher, accumulation distribution telling us every time the stock moves higher, institutions are pulling their money out of this stock. And what we actually got going on here is a divergence. We got a complete divergence going on here, guys. It looks like the price action is screaming higher while we got a definite head and shoulder pattern pointing to a move lower. Therefore, a 93-point drop in this thing, considering what the options are valued at right now, could produce substantial returns. We're talking about 3, 4, possibly 500%, depending on what the stock is going to do, the way it's going to react to the actual earnings report. And we're going to review both opportunities here in just a second. So first, try to understand that the stock selling off a much higher volume. Then on the volume, when it actually appears like it's going higher, when it's really not going higher, it's just really stalling at this level. So if you focus on a daily reaction, if you're focusing on daily price action, what something is doing, you're just going to lose your freaking mind if you're trying to trade weekly options. What you really need to focus is where something is actually going next. And everything on this chart, you got a def hook developing right here as far as your moving averages on the blue line and the orange line. They're getting closer and closer together. Ultimately, they will cross. Now, it's difficult for you to see that they're going to cross now because, damn it, look at this. The difference between 1121 and 1009. That looks like, man, we got miles to go. But guys, when this thing drops tomorrow, $93, you're going to be looking at this thing trading right here at about 1060, 1065 level.
Come here, baby. Sit down.
All of a sudden, this def hook is not going to look that far out of reality. And actually, specific conditions that MACD is doing the same thing. MACD is actually forming a def hook as well. Now, if you're not familiar with the terminology like def hook, def cross, guys, just click the link below. Take the charts, divergences, and pattern recognition course. Stop playing around, losing money in the stock market, okay? You got to figure out exactly what the hell is going to happen next. So we got two def hooks, okay? I would not bet against two def hooks. Basically, I would not be buying calls in this type of circumstances, okay? So in any case, when you look all of these, there's just too damn many reasons to not be buying puts on this thing. You got a double top. If we look at a different time frame on the chart, which is weekly, you got clear confirmation of divergences on the RSI. You got double top formation. You got everybody and their mama-in-law buying the hell out of this thing forever, since like March of 2018. So they've been buying the heck out of this thing. You know, at some point, good things come to an end, and this is exactly what's about to happen after these earnings report. You're going to see institutions running for their hills, pulling money out of this thing. And if you look at the MACD, right, when we took at the daily chart, we saw that the def hook is forming. Well, we actually had a def cross already formed on the weekly chart. And so you got a beautiful condition here where there's a lot of people are going to come in and take profits after this report. So you're going to be thinking, okay, Leonardo, okay, so you're going to show me a couple of charts here. You expect me to just, you know, believe you, okay, and just short the hell out of this thing. Okay, fine. For those of you skeptics out there, let's take a look at the rest of the sector. This is what the rest of the sector is doing. Advanced Auto Parts, competitor of AutoZone, which what AZO basically is. So you may be thinking, Leonardo, you're so wrong, buddy. You don't know how to read the damn charts. Look at what's going on here, man. Look at this beautiful, okay, cup with a handle pattern right here on AAP, which is Advanced Auto Parts, which is a competitor to AutoZone. And looking at this, Leonardo, you are totally wrong. Dude, you don't even know what the hell you're talking about. I mean, we know you get a few trades right here and there, taking $4 grand to 140 grand. I mean, who cannot do it these days? I mean, clearly, shit, now that I think about it, nobody can do it unless they follow my recommendations for our paid membership. But, you know, here, I'll give you a freebie right here, guys. What we have observed in the last 3 or 4 months is the fact that a lot of these cup with a handle patterns, they fail. Now, typically, this is a really cool pattern. This is highly bullish, but you have to put things in the context. And the context is such that a lot of these bullish patterns have been failing, especially when they coincide with the market's hidden all-time high, which we're not very far off all-time highs. So despite of these bullish pattern that is just so freaking awesome, again, typically I would say, hey, let's buy some calls here. Okay, that is no longer the case because you have similar conditions as this cup is actually formed. Look at this handle formation. You got institutions coming in and getting rid of it. So the price action tells you, oh, we're going higher. And if you are the type of trader that's just following the daily moves, you're sitting there thinking, oh, Jesus, Leonardo, you're freaking wrong. This thing is about to rocket higher. While in reality, institutional selling is telling you exactly the opposite. They like this level to actually come in and take profits. So when you have this condition where the cup on a handle is created, but the institutional selling is coming in, that tells you that this breakout or this potential breakout is not actually going to materialize, especially when it's confirmed by this cross or the potential death hook that is about to materialize. It's not 100% clear right now, but trust me, this is exactly what is actually about to go down, especially when you look at the weekly chart. The weekly chart is actually pointed. Multi-top formation. Damn it. Top 1. Top 2, top 3, top 4, top 5, top 6. And we are against the blue. And if you're wondering, what the hell is the blue? Guys, the blue is the 50-day moving line. I mean, last time we got to the 50-day blue, guess what happened? The stock dropped. Now, a second time around, the probability is actually going to break above that is just not good. And if you pay close attention to the death hook, the blue line is getting awfully close to the orange line, which means we are about to cross. And the catalyst for this cross in Advanced Auto Parts would be the report that many people are not actually going to like when AZO, AutoZone, reports the earnings tomorrow. It could be a good report. We're not saying whether the report is going to be good or not. We're saying the reaction is going to be poor, which is going to drive this stock chart right here of advanced auto parts lower. So there's multiple ways to look at it. Okay, the only positive thing that is possibly developing right here is the MACD. Now, sometimes the MACD will create a false breakout, just like it appears like this thing is about to rocket high, but indeed it's about to reverse and go lower. Something I forgot to highlight right here, guys, it's a middle finger. Middle finger is in process here. Basically, what you're looking at here is when the stock was selling off, it was selling off at a much higher volume compared to the volume on when it's actually trying to move higher. That is actually highly bearish. Okay, what else you got here, Leonardo?
This was you at 9:30 this morning, feeling lucky when the market just opened up. Feeling lucky without any calculations. Now, this was you at 4:01 p.m. when the markets closed. Suddenly realizing that some calculations would have definitely helped you out today. And this is you now, trying to figure out how to get it all back.
Great news! You're only 13 moves away from figuring it all out. Calculate your next trading move before it happens so you can celebrate each trading day. Get the 13 market moves formula today and begin to trade fearlessly.
Well, we got O'Reilly Automotive. O'Reilly Automotive, man, what a beauty. What a beauty right here. At a level of $3.99 to $4.05, every time it gets to $4.05, it gets shut down. Okay, like a space shuttle trying to fly to the moon that just runs out of fuel. Okay, basically that's exactly what you got going on right here. Despite of this volume, which appears to be a positive volume, this gray bar actually technically is supposed to tell you, oh, but Leonardo, but they're buying the hell out of the same. Unless you really understood that this gray bar was actually supposed to be recorded as a negative red bar. Basically, when you see a candlestick form like this, combined with a gray bar, what they're really doing is when the stock gets here, they are selling it. So they are selling the hell out of O'Reilly Automotive while it appears the price action is actually going higher. Now, why would they be doing that? Well, hold on a second, because they don't think this good thing is going to continue. We've been here before, okay? Once, twice, third time, okay? After that, you should expect a drop. And as similar conditions in AAP chart, you got the blue line getting terribly close to the orange line. This is a condition for a death hook, which is going to materialize into a death cross. Guys, it's this damn simple, especially when you get a confirmation on the accumulation distribution like this. This is a downward spiral. Nobody wants to buy this damn thing no more because they're more interested in taking profit. And that makes perfect sense. Especially when you're looking at the weekly chart of O'Reilly Automotive, which is a confirmation of the negative divergence on the RSI, basically telling you, hey, this stock is not going any higher. The only possibility for this stock is to move lower. The only question is by how much. And we're saying, hey, in the next 120 days, you can see the stock at 287. But it's not the purpose of analyzing the O'Reilly Automotive that we want to talk about here. What we really want to talk about is where AZO stock price is going to move tomorrow. So here's option one. Option one for AZO. Currently it's trading at 11.58 as we're recording this at around 1 p.m. on September 23rd, 2019. So it could easily just flop tomorrow after the earnings announcement, and it's going to do this. It's going to drop, pop, drop, pop, drop, pop, drop, pop, okay, and ultimately drop to a level of 1065. So we're targeting this $93. That's how we're coming up with this number of 93. 1158 less 1065 gives you a $93 drop. So ultimately, the easiest strategy you can do you want to buy a ton of options just expecting it automatically going to drop? No, you don't want to do that because the option costs too much in the expectation of a bigger move by pretty much all the market participants. So, but however, do you want to completely avoid this scenario? The answer is no. You do want to partake in this scenario. So you don't want to go and buy like 100 of these put options, but you do want to take some put options at this level because it has a high probability of straight up reversion downward after it announces earnings tomorrow pre-market on September 24th. However, let's not discount the probability, which is actually a very high probability, that initially the stock is going to move from 1158 to level 1180. 1180 is going to run to a major resistance level, after which the stock is going to drop off like a rock, yes, to the level of 1065. In this case, we're looking at a drop of more like 120 bucks, 130 bucks. But bottom line, if you see this move tomorrow morning pre-market, the stock is going from 1158 to a 1180 on low volume. Low volume for this particular stock would be, if you observe it, if you pull up your trading account and you're looking at pre-market volume, if you see this thing about 7, 8 o'clock in the morning, the stock is only up on like 20, it's up $20, $30, but only on the volume about 3, 5, 6,000 shares. Okay, it is telling you that it will reverse once the market is going to open at about 9:30 a.m. So what you want to do is you want to short the hell out of this thing while it's actually looking like the price action is screaming to go higher. But it's screaming to go higher in low volume while the market is hitting pretty much all-time highs. The reversal is near. Guys, this is the damn trade. This is the ultimate case scenario that will produce the highest return. So, guys, the bottom line here are the takeaways. Buy some put options ahead of earnings, okay? And if the stock does pop, okay, be ready to actually put a sizable position to make sure that you short the stock on the bounce. And for those of you that forgot how the bounce looks, here it is, guys. Let's roll. 13 market move style, okay? And here's just one of the phenomenal trades for this week. Catch it, let's rock it, and let's collect some profits once it drops to 1,065. I'll catch you guys on the next trade soon.